Alright, what's up guys? So, just want to say first of all, welcome to the new channel. So I do appreciate it if you guys have subscribed to this channel. Also, if you guys have not had a chance to hit that notification button. So today, what we're going to talk about is why I am looking to purchase an apartment complex. For some of you guys that have been with me in the beginning of my journey, you guys know that I've purchased multiple rental properties, single family homes. Now I'm to the point of my real estate portfolio or my career that I want to get into apartment complex. Getting an apartment complex just makes a lot more sense versus single family residence. And here's a couple of reasons why I want to purchase an apartment complex. So number one, all right, we're going to talk about tax benefits. Basically, when it comes to apartment complex, you can literally write off a lot of things when it comes to apartment complexes. Especially out here in Las Vegas, there's a lot of tax deductions that you can do with apartment complexes. However, I'm not going to get into that just yet. And the reason why is because today is about analyzing and how to calculate a cap rate and how to find a deal. So I'm going to make this very simple for you guys, okay? So number two is actually expenses, right? And what I mean by this is that what's great about this is if you have an apartment complex, you only have one property to manage versus having 10 or 20 properties to manage. So if one property, the roof goes bad, the next thing you know it, what happens is now that roof is bad versus you having just one roof. So everything is just all under one. Now let's go back over the expenses. The reason why expenses is a big deal is because when you have 10 or 20 properties, let's just say, now you got to pay for trash, sewage, that all adds up versus just paying for one location. Number three, okay, this is important. Add value, okay? And what I mean by add value here, and this is what I like about apartment complexes, would add value. If you bought a single family residence, right, if the market tanks, right, what happens is if you run the comps, the home will only appraise based upon what it's actually worth. For an apartment complex, what's great about that, no matter if the market does tank, everything is based upon the cap rate, right? It's like running a business. It's how much is this business producing, okay? So now we need to figure out in your state, or you need to figure out in your state, what is the cap rate? So I'm going to make it just very simple. The cap rate here in Las Vegas is actually at 3%, okay? So we have a 3% cap rate across the valley right now, okay? Now you need to figure out in your state what the cap rate is, right? So cap rate is actually capitalization rate. Now what is capitalization rate? How do we figure out the capitalization rate? So the first thing that you need to do to figure this out is actually the purchase price. What is the purchase price of the home? All right. Then you have the cash flow. That's how much money is actually coming in through all the rents. Then you have the expenses. How much does it cost you to run this apartment complex? Then you have the NOI, which is the net operating income, right? So to figure this out, this is what you'll do. You take the purchase price of the home. You have that. Now we have the cash flow. Then you have the expenses minus the cash flow. You have the net operating income. Now you take the net operating income divided by the purchase price. Now it gives you the cap rate. So let me give you an example here. Okay. So let's take a look at this apartment complex right here. Okay, so this apartment complex that we're looking at is a 12-unit apartment building. And it's offering at $1.3 million and at a cap rate at 3.56%. Okay. As you can see, for 12 units, they're asking about $109,000 per door. It was built in 1962. Now, typically, when you look at these apartment buildings, what's going to happen is they're going to give you a rental portfolio, right? So basically, it's going to show you exactly what the rents are actually producing, what the expenses are, but you'll never go off of that, okay? So in this case, it shows you here the purchase price here on this home, or this apartment, I'm sorry. So as you can see, it shows you on this apartment complex, the asking price is $1.3 million, okay? The cash flow, we can't determine the cash flow because it doesn't show you the rental pro forma, all right? So we need to figure out what is the cash flow for this property. And I'm going to show you how to reverse prospect this real quick. Also, we need to figure out what the expenses is. But it does say that the cap rate is at 3.56%. So how do you actually figure this thing out? So what you're going to do is reverse prospect. So what we're going to do is take 1.3 million, okay, times 3.65%. That gives you the net operating income, okay, for this deal here. And that's if this is actually accurate. So basically, this apartment complex produces $46,280 a year, okay? So now we got to figure out what is the expenses and what is the cash flow. So just to simplify this, because we don't have all the information, we're just going to throw a couple numbers in here so that way you can just see exactly what's going on, okay? So we know that the cash flow, all right, with the net operating income, so your cash flow on here, let's just say, it's going to be $46.80 because we already have that number. The expenses, so we're going to say $20,000. Okay, so technically this apartment complex produces $66,280. Does that make sense when you combine the two? But you have the expenses. Once you get your operating income, that's it right here. You take this number, divide this by 1.3, and that should bring you to 3.65%. So let's try that at home, guys. So go ahead and do that right now. So you're going to take 46,280 divided by 1.3 million should give you 3.56%, okay? So now that we have this, now this is what I like about apartment complexes. How do we force the value to go up, okay? We know around the valley, cap rates are about 3%. So how do you really determine that? Cap rate is really based upon an all-cash deal. If you bought the property cash, right? You bought it cash. You know what the cash flow is every single month, annually. You got the expenses monthly, annually. Gives you the operating income. Calculates the cap rate. However, what you're going to do is you're going to see other apartment complexes that are nearby, and you're going to see what their cap rate is. Now, what happens is the cap rate is kind of like the value or like the appraised value, okay, at this time. Now, keep in mind, the higher the cap rate is, the lower the purchase price is going to be. Does that make sense, right? The higher the purchase price, the lower the cap rate is going to be. So now, this tells me, right, 46.28. Now, we take that, we divide that by 12 months, okay? Because now we're going to do a reverse prospect because we're going to find out how much each unit is renting out for. So that's what we need to take a look, okay? So let's figure this thing out. So we know cash flow for this 12-unit building is $46,280, okay? Now we need to divide this, all right, by 12 months because we're going to break it down now, okay? We're going to reverse prospect this thing. $46,280 divided by 12 months equals $3,856 a month. We have 12 units total. So now we need to figure out how many units we have, right? So now we're going to take that, divide that by 12. Okay? So this says that each unit is renting out for $321. Let's make sure that's right, times 12. Yep, $321. But this is just the income that you make off of it, right? So I'm just trying to simplify this. So now let's talk about add value. How do you force the appreciation up? Okay? So now let's just say you realize that this apartment complex that you're looking at is only renting out for $321, but you know that you can raise it, the rents, by $50. Okay? So if we add 321 plus 50 is going to be 371. Okay? So this is what I love about apartment complexes. So now we have 371 per unit. $371 per unit times 12 units equals, let's see here, 371 times 12 units. Now you're making $4,552 a month. But now we want to times that by 12 months. Right? Well, hold on, 12 months. Let me get this a little bit better so that way you see that here. We're going to times that by 12 months. And let's figure out what this is. Times 12. Now, this is what the apartment complex is making. All right? So now let's determine, because you went in, you raised the rates. We know the cap rate around the area is roughly about 3.5%. So now, when you go and appraise the property, because that's what the bank is going to do, and this is what I love about this, okay? So now you take $53,424, right? You're going to go ahead and divide that by 3.56% cap rate. Now, right, let's just say, make this easy for you, 3, 4, 5. Cash flow, divide this by 3.5% cap rate around the area. The total value of your new property today would be $1.5,674,000. So you literally just increased the value of this apartment complex by raising the rents $50 for each unit, $200,674. See how that makes sense? That's the forced appreciation. So if the market goes down, it doesn't even matter. Because of your apartment complex, you raise rates. Now, you can only raise rates if it justifies in that location. If your apartment complex is a dump, you're probably not going to be able to do it. But if you can buy the apartment complex low enough and you know how much it costs you to do the repairs in order for you to raise the rents, so that way you can be in an equity position, that's great for you, right? Because now you're forcing the appreciation up. And a lot of investors, what they will do is they'll go into an apartment complex, right? They'll rehab it, all right? Let's just say we know that $1.3 million for it, but now they know that they can put in $500,000 into it, right? They're going to be into it for $1.8 million for the rehab. But let's just say they have rents now going in for $780,000 times 12, right? Let's do the math again. 780 times 12. Look at this. 9,600, well, 9,300, I'm sorry. 12 months times 12 months. This is what they're making a year. You take that, you divide that by 3.56%. Now, this is the value of that apartment complex, $3,155,056. But we know, we talked about this, they purchased at $1.3 million and needed a lot of work, $500,000. They were into it for 1.8 million, like we talked about. They raised the rents, right, dramatically. Now it's worth this. So now that they are into it for 1.3, right? This is the value, 1.35, I think it was. What was the value on this one? Let's see here. So the value was this. They were into it for 1.8 million. Okay. Look at the equity position here. Does that make sense? So now what investors normally will do is cash out refinance, take their $1.8 million out, refinance the whole apartment complex, right? So now they have their money back. They have all this right here back. Now they can deploy this money back into the marketplace, and they're only financing this much, or sometimes even more, because they raise their rents, right? Now what they do is they go out, they find another apartment complex. This one right here, they basically got it for free. So the return on investment is actually infinity. So basically that's how you use the bank's money. So that's the reason why I want to get into apartment complex, because this is the fastest way to grow wealth. Now, if you guys like more video content like this, let me know in the comments below. Also, don't forget to hit that notification button too as well. And also, don't forget to subscribe. Other than that, till next time, I'm Chakits.